37%. That is how much silver dropped in a single trading day. No war, no pandemic, no bank failure, no emergency Fed meeting, nothing on the news, nothing on the wires, complete silence from every financial outlet on the planet. And yet silver went from $121 to $75 in just 6 hours. 46 per ounce. Gone. Evaporated. Erased from existence. Gold dropped from $5,600 to $4,700. $900 vanished in the same window. Hundreds of billions of dollars in value, destroyed in less time than it takes to watch a movie. I have been covering markets for years. I have seen crashes. I have seen corrections. I have seen panic selling. This was none of those things. This was something else entirely. And when I show you what I uncovered, you will never look at precious metals the same way again. Everyone is asking the same question tonight. What happened? What changed? Why did silver just lose 37% with zero news? The analysts are confused. The experts are scrambling. The mainstream financial media is giving you the same recycled talking points they always give you. Markets got ahead of themselves. It was a healthy correction. Silver was overbought. That is the official story. That is what they want you to believe. But I found something different. Something they are not showing you on CNBC. Something that connects this crash to two other crashes that happened decades ago. Same pattern, same tool, same destruction. This is not speculation. This is documented. And by the end of this video, you will see it clearly. Welcome to Finance Currency. If you are new here, this is where we expose what is really happening in global markets while everyone else chases headlines. We go deeper. We connect dots that others miss. We show you the hidden machinery behind the financial system. Subscribe right now and hit that notification bell because this is the kind of analysis that gets buried by algorithms. And if this video opens your eyes, smash that like button. It helps more people find this information. Now let me show you exactly what happened on Friday. Friday morning, January 30th, last trading day of the month, last trading day of the week. Silver is sitting at $121. January had been historic, the best month for silver in decades, 65% gains in 30 days. Everyone was celebrating. Twitter was euphoric. Reddit was euphoric. Every silver investor on the planet thought they had finally won. Analysts were calling for $200. Some said $300. People were posting screenshots of their portfolios. Generational wealth, they called it. The trade of a lifetime. 9:30 a.m. hits. New York opens. And within seconds, everything changes. A tsunami of sell orders floods the COMEX. Not small retail orders, not profit-taking. This was institutional size, millions of ounces being dumped simultaneously, the kind of volume that does not appear by accident, the kind of coordination that does not happen naturally. Silver drops from $121 to $115, then $110. Then it breaks below $100. That psychological barrier that everyone said would hold forever. The line in the sand, the support level that was supposed to be unbreakable. Gone, blown through in minutes, but it does not stop. $95, $90. $85, $80. Stop losses are triggering everywhere. Margin calls are flooding inboxes across the country. Traders who went to sleep wealthy are waking up to liquidation notices. The system is selling for them, whether they want to or not. By close, silver is at $75. Gold is at $4,700. 37% destruction. 6 hours, one trading session. I watched it happen in real time. I watched accounts get wiped. I watched years of gains disappear in hours. I watched people lose everything while the financial news anchors smiled and said, just a correction. Here's what they told you. Silver was overextended. The rally was unsustainable. Profit-taking was inevitable. This is healthy. This is normal. Markets do this. That is the cover story. That is what they want on the record. Now let me show you what actually happened. I want you to watch something. Watch the 60 days before Friday. Pay attention to the dates. Pay attention to who was making moves behind the scenes while everyone was celebrating silver's rise. December 12th. Silver is surging. Headlines everywhere. Retail investors are piling in. The momentum is undeniable. That day, the CME Group, the exchange that controls silver futures trading in America, quietly raises margin requirements by 10%. It barely makes the news. Nobody pays attention. December 29th. Silver keeps climbing. Has not slowed down at all. The rally is getting stronger. CME raises margins again. This time it is aggressive. 25% increase. Overnight. No warning. December 30th, the very next day. Less than 24 hours later. They raise margins again. 2 margin hikes in 2 days. That almost never happens. January 28th, just 3 days before the crash, CME does it again. But this time they change the entire system. They move from fixed dollar amounts to percentage-based margins. 9% becomes 11%. For riskier accounts, it jumps to 12.1%. 4 margin hikes in 6 weeks, 80% total increase. And then on Friday, silver crashes 37%. Coincidence or something else entirely? Let me explain what margin actually means, because once you understand this, everything else makes sense. When you buy silver futures, you do not pay the full price up front. You put up a fraction. That is your margin, your collateral, your skin in the game. It is how leverage works. You control a large position with a small amount of cash. But here is the catch. When they raise margin requirements, every trader holding a position suddenly needs more cash. Not next week, not when it is convenient. Right now, today, immediately. And if you cannot deposit that extra money within hours, your position gets liquidated. Sold. No negotiation, no appeal, no mercy. You are simply out. Let me give you an analogy that makes this real. Imagine your landlord calls you right now. Your rent just went up 80%. You have until midnight to pay the difference. If you cannot, you are evicted. Tonight. That is essentially what happened to every silver trader in America. Your account needs 80% more cash. Deposit it in the next few hours, or we are selling your entire position. Most people do not have that kind of money sitting in their checking account. They cannot pay, so they get liquidated, forced to sell, whether they want to or not. Now multiply that by thousands of traders, tens of thousands, all getting the same margin call, all being forced to sell at the exact same time. What do you think happens to the price? It does not decline, it does not correct, it collapses, it crashes, it falls 37% in a single day. This is the part they do not want you to understand. The CME controls the margin requirements. They decide how much cash traders need. They can raise those requirements whenever they want, by whatever amount they want. And when they raise margins during a rally, they do not slow the rally, they destroy it. They trigger forced selling, they create artificial supply, they crash the price not because the fundamentals changed, but because they changed the rules of the game. This is not the market finding fair value. This is not organic price discovery. This is an institution pulling a trigger. And here is what should disturb you most. They have pulled this exact trigger before. Silver runs from $6 to $50, an 800% gain in just a few months. Regular people are making fortunes. The Hunt brothers are accumulating silver. The system is under pressure. Banks with short positions are getting crushed. What was the response? The CME creates something called Silver Rule 7. It essentially bans leverage buying overnight. You want silver? Fine. But you pay 100% cash, no margin allowed. That same month, Paul Volcker at the Federal Reserve raises interest rates from 11% to 20% in a single move. The result? Silver crashes from $50 to $10. 80% destruction, it was over. They blamed the Hunt brothers. They called it speculation. They said they were protecting the market. But look at what they actually did. They changed the rules, they raised margins, they crashed the price. Sound familiar? Silver runs from $8 to $50, a 600% gain. Retail traders are piling in everywhere. Banks with massive short positions are underwater. The same pressure is building. What was the response? The CME raises margin requirements 5 times in 9 days. 5 times. In just 9 days. 84% total increase. The result? Silver crashes from $50 to $26. 50% destroyed in weeks. It took 13 years for silver to recover from that crash. 13 years. They called it volatility management. They said they were protecting traders. They said it was standard risk procedure. But look at the pattern. Rally, margin hikes, crash, same weapon, same outcome. Now here we are. 2026, silver runs from $26 to $121. A 450% gain. The biggest rally in modern history. What was the response? CME raises margins 4 times in 6 weeks, 80% total increase. The result? Silver crashes 37% in a single day, the fastest destruction of the three times in 50 years. Same setup, same tool, same destruction. Once is an accident, twice is a coincidence, 3 times is a pattern. Every single time silver threatens to break out. Every single time regular people start building real wealth in precious metals. Every single time gold and silver start exposing the weakness of paper money. The exact same playbook executes. This is not coincidence. This is not risk management. This is a system, a protocol, something they deploy whenever silver gets too powerful. So the question that really matters is why? Why does someone care this much about crushing silver? Why run the same play 3 times in 50 years? Why raise margins specifically when silver rallies? The answer has nothing to do with silver itself. It has everything to do with what silver represents, what it threatens, what it exposes. The United States has one superpower no other nation possesses, the world reserve currency. Every country needs dollars to buy oil, to trade internationally, to hold reserves in their central banks. This is why America can print trillions and still survive. This is why they can run $35 trillion in debt and just keep spending. Because the world has no choice. Everyone needs dollars. Everyone must participate in the American financial system. But if silver goes to $500, what does that say about the dollar? If gold hits $10,000, what message does that send to the world? It says the paper has failed. It says 50 years of money printing has caught up. It says the game is over. That message cannot be allowed to spread, so they crush silver. Same way they did in 1980, same way they did in 2011. Margin hikes, forced liquidation, price destruction, not because silver is dangerous, but because what silver represents is dangerous. Truth. While America was panic selling on Friday, while traders were getting liquidated, while paper silver was crashing 37%, someone was buying. Shanghai vaults drained 27 tons of silver in a single day, not sold on the market, removed from the vault. Physical delivery to buyers who wanted actual metal in their hands. This has been happening for months. While Western investors trade paper contracts back and forth, Chinese buyers keep taking physical delivery. The vaults keep draining. The metal keeps moving east. America crashes the price. China says, "Thank you for the discount." America dumps paper contracts. China loads trucks with actual silver bars. One side is trading promises on computer screens. The other side is accumulating real assets they can hold in their vaults. Which side do you think understands what silver is actually worth? Let me show you how dominant China has become. China controls 60 to 70% of global silver refining. Not mining, refining. They are the gatekeeper. Silver gets mined in Peru, Mexico, Australia. But it all flows through Chinese refineries. They control 90% of rare earth processing. The materials in your phone, your laptop, your missiles, they control 98% of gallium refining, essential for semiconductors. They control 80% of cobalt processing. Every lithium battery depends on it. They control 60% of lithium refining. The entire green energy revolution runs through China. And on January 1st of this year, China classified silver as a strategic national security resource. Export controls, same category as military materials. The West crashes paper prices. The East accumulates physical metal. This is not market behavior. This is financial warfare. Here is what you need to understand about Friday's crash. Paper silver and physical silver are not the same thing. The paper price says 75. That is what the futures market says. That is the number on CNBC. But try buying physical silver at that price. Call your local dealer, check the online retailers, see what premium they charge over spot, see if they have any inventory at all. Before the crash, when silver was at $121, mints were already struggling. Perth Mint suspended wholesale orders. The U.S. Mint halted Silver Eagle sales. Dealers were defaulting on deliveries. The price was $121, and you still could not buy silver easily. Now the price is $75, and the situation is even worse. Paper can be created with a keystroke. Paper can be manipulated with margin hikes. Paper can be crashed whenever they choose. They control the exchanges. They control the rules. They control the entire game. But physical silver cannot be printed. It cannot be margin called. It exists in the real world, independent of their control. When you hold physical silver in your hand, nobody can force you to sell it. Nobody can change the rules overnight and liquidate your position. It is yours. Two markets, two prices, two realities, diverging more every single day. Here is what did not change on Friday. Silver has been in a supply deficit for 5 consecutive years. Every year since 2021, more silver has been consumed than produced. The cumulative deficit is over 800 million ounces, nearly a full year of global production that simply does not exist. Industrial demand is exploding. Solar panels need silver. Electric vehicles need silver. Electronics need silver. AI data centers need silver. Military systems need silver. That demand grows every year. It is accelerating. Meanwhile, supply cannot keep up. No major discoveries in years. Ore grades declining at existing mines. It takes a decade to bring new supply online. Demand rising. Supply constrained. Deficit growing. None of that changed because of one crash. What changed on Friday was a paper price, a number on a screen, a number controlled by futures contracts and margin requirements. Paper prices can be manipulated. Physical supply and demand cannot. Now here is what I need to tell you, honestly. I do not know if $75 is the bottom. Could silver go to $50? Yes, it absolutely could. Could it bounce back to $100 next month? That is also possible. Nobody knows for certain, and anyone claiming certainty right now is either lying to you or trying to sell you something. What I know is this. The CME raised margins 4 times in 6 weeks. Silver crashed 37% at the end of that sequence. This exact pattern has played out twice before in 50 years. Both times, silver eventually recovered to make new highs. The physical market is broken. The paper market is manipulated. China is accumulating while America sells. What happens next, I genuinely do not know. But I know what the pattern says, and I know what history shows. They called it a crash. I call it a crime scene. They called it volatility. I call it the same playbook running for the 3rd time. They called it risk management. I call it the system telling you exactly what it fears. If silver truly did not matter, they would not do this. They would not run the same operation 3 times in 50 years. They would not coordinate margin hikes right before crashes. They would not care about the price of a metal, but they do care. They care deeply, because silver exposes the lie. Silver shows what real money looks like. Silver threatens the paper system that benefits the people who control it. The intensity of the attack tells you the value of the target. Remember that. They can crash the paper price. They cannot crash the metal itself. They can liquidate futures contracts. They cannot liquidate silver sitting in your safe. They can manipulate markets. They cannot manipulate reality forever. They keep printing trillions. Silver cannot be printed. One of those has to win in the end. And history has already voted on which one. They crushed silver, it came back. They crushed silver again, it came back. They just crushed it a third time. What do you think happens next? Friday was not a crash. It was a message, a reminder of who controls the paper markets, a demonstration of power. But it was also confirmation. Confirmation that silver still matters, that precious metals still threaten the system, that after 50 years of unlimited money printing, they still cannot make gold and silver irrelevant. And that might be the most bullish signal of all. 37% in a single day. No news, no explanation. Now you know why. The margin hikes, the 50-year playbook, the China connection, paper versus physical, the war nobody talks about. The data is public. The dates are documented. The pattern is there for anyone willing to look. What you do with this information is entirely up to you. This is finance currency. And this is the hidden economy. If this video opened your eyes, hit that subscribe button. Share this with someone who needs to see it. Drop a comment telling me what you think, and I will see you in the next one.